Meeting of the Senate Finance Committee to order. And we have the prime sponsor for our next bill, and you could introduce yourself and the bill, Senator.
Thank you, Mr. Chairman. For the record, I'm Sydney Rosenwald, and I represent Senate District 13, which is most of Nashua. I'm pleased to today introduce Senate Bill 553. This is a bill to grow the New Hampshire economy. By a conservative estimate, it will increase local revenues, doubling the total yield of municipal cash reserves, increase the amount of lending available to small businesses that might find access to credit difficult, create 2,000 new jobs, and grow the state's GDP. It will also lead to a modest increase in state revenues. It does all this economic expansion by requiring the public deposit investment pool created by the state and mostly comprised of municipal cash reserves to be invested in financial institutions with a physical presence in New Hampshire and to be secured and collateralized. The Public Deposit Investment Pool, or PDIP, as I've learned to call it, was created by statute about 30 years ago, a little more, to give municipalities an option for investing their cash reserves. But it has really grown over time. Just a couple of years ago, it was worth about $200 million. Today, it's worth approximately $650 million. It's managed by a professional management company as required by state law, and 100% of these dollars are invested in other states and in some cases, other countries. So the goal of this bill is to put these taxpayer funds to work in New Hampshire to grow our economy, not the economy of other states or countries. I've been working with the bankers on this idea, and they commissioned a study from Policon Research. This study demonstrates that putting the PDP money in New Hampshire financial institutions will lead to nearly $200 million more in commercial lending, especially to small businesses, and basically double the yield to our cities and towns when the downstream revenue impacts, such as business taxes, rooms and meals taxes, and property taxes, are evaluated in addition to the interest. And that's just taking into account the commercial banking side, which is about 1/3 of the banking sector. There will be further positive impacts on our economy from increased funds available for mortgages, auto loans, and other consumer credit options. And perhaps, at least as importantly, these funds will be extremely safe for taxpayers with good liquidity. And there are people better prepared to answer technical questions than I am. I hope the committee will look favorably on this bill. Happy to take questions.
Thank you, Senator.
Thank
the questions from committee members. I do have a question of you. It's more of a technical question, but I want to ask it of you so that others that come up can help put that in their testimony. Okay? Because you talked about downstream gain by the study, what is the short-term difference between investments in the one or the other right now? And I believe that there is a difference. So if you know, please tell me. If you don't know, defer it.
How short-term are you talking?
Well, right now, if I invest in, I have to invest in New Hampshire, what is my expected interest rate? And if I am allowed to invest outside of New Hampshire, what is my expected interest rate? Okay?
So I think right now, as of the other day, and if I'm wrong, I'll be corrected. The yield from the PDIP was about 5.45%. It's gone up and down. Their fee was suspended during the pandemic because the interest rates were so low. But I think it's about that. The rates that can be negotiated through banks are quite close to that, but I'm sure that the bankers will address that.
I hope they will. And the second follow-up question has to do with, this bill says 100% into New Hampshire, whereas projects that may be done by a particular company may have components that are, inside and outside of the state. Would there be a possibility of that happening, and would we be better off to say some other percentage other than 100?
Well, I think the bill isn't specific to the project, but it's specific to where the financial institution has a presence. They need not be New Hampshire chartered institutions, but merely have a presence here. And more technically, that I cannot address, there are requirements for banks to invest and report on the amount of money they're putting into their local communities. And I believe you'll hear that testimony. As to whether or not some other percentage could be considered,
Again,
I think 100% is.
Sure I asked those questions early so other people
Yes,
who come up can address some of those issues. Further questions for the Senator?
Thank you, Mr. Chair. Thank you for taking my question. In your opinion, do you think if we pass this bill that this would end the PDIP? Do you think this would be the end of it? Would the communities no longer need it?
No, I don't think that. I think particularly for smaller communities, the economies of scale by being in the pool are really important. I don't think it would end the PDIP.
Thank you.
Seeing no further questions?
Thank you.
Senator. Senator Ricciardi.
Good afternoon, Mr. Chair and members of the committee. For the record, Denise Ricciardi, State Senator for District 9, representing 13 beautiful towns from Bedford to Hinsdale. I am very proud to be among this bipartisan group of legislators co-sponsoring Senate Bill 553, requiring funds in the public deposit investment pool to be made secure and promote investment back into New Hampshire. I support this legislation for several important reasons. The first reason is it protects taxpayer funds by requiring funds in the PDIP to be insured or collateralized. This legislation appropriately provides another layer of protection for public funds. While this is commonplace for municipal funds elsewhere, this makes it required for funds in the pool. Having experience with town investment policy as a former Bedford Town Councilor, I have some broad expectations as to how towns, counties, and schools should be investing their excess taxpayer dollars. It is through the legal requirement that towns review and adopt an investment policy annually and understand the investment tools they choose to use and the appropriate time to use them. The legal requirement is in place to be sure that the governing body is annually assessing the town's cash flow, current and upcoming funding needs, levels of risk that are acceptable with taxpayer funds, and the overall objectives for what is a reasonable expectation for investment revenue measured against risk. There are and should be many tools for governments to invest taxpayer funds. And as Bedford's investment policy, it states that the safety of the principal is the foremost objective of the town's investment program. Investments shall be undertaken in a manner that seeks to ensure the preservation of capital in the overall portfolio. As many local investment policies also state, return on investment or yield is of importance compared to the safety and liquidity of the funds, and the diversification of the portfolio is a key consideration in all decision making. One objective of this bill is to mitigate risk, the risk of loss due to the failure of the issuer. When looking at the big picture, $3.8 billion were collected in local property tax in 2022. Property tax makes up 52% of all state and local tax revenue collected from all sources, and towns collect all property taxes on behalf of the schools, the county, and state education. Knowing that most towns send a tax bill twice a year, that means an estimated $1.9 billion was collected in half of 2002, and over $600 million of those dollars are reported to be currently invested in the pool. Based on this simplified example, that's 32% of all local tax dollars collected are uninsured and not collateralized, not backed by the state or federal government. I understand the pool is a very liquid tool when compared to a CD with a similar rate, increasing its use as a tool. And I know our towns need more revenue, because I work every session with my colleagues to address that very issue. But taxpayers need assurances that a Wall Street collapse will not result in a loss of potentially 32% of their dollars at the local level needed to run town operations and public health and safety programs. Some questions that I asked when I first was asked to consider this bill was, does the pool have a good overall credit rating? Yes. Is there possibility of risk exposure to property tax dollars? Yes. Can a town get the same or similar rates of return on 100% collateralized or FDIC insured investments? The short answer is yes. They may give up some liquidity, but will have 100% safety for a similar yield. That point needs to be heavily weighed and considered as this bill is discussed. Can withdrawals be denied by the pool? If so, under what circumstances? Yes, but I am unsure as to what those circumstances might be. Are the funds 100% withdrawable at any time and the balance be brought to zero? In the case of an economic or weather event requiring immediate cash, can a town transfer all funds to a zero balance? And I have received mixed answers to this question. Finally, I do agree that keeping our taxpayer funds local to grow our economy at both the state and local level is important. Reinvestment in our state can only increase prosperity, as indicated by the study conducted by Policon. The study demonstrates compelling evidence of how our New Hampshire GDP will increase. Personal and commercial loans can be expanded to spur more housing projects, renovations, and reuse of existing spaces, mortgages, business expansions, translating into more taxable property spread among more taxpayers and a lessening of the overall burden. Thank you.
Questions for the senator? Seeing none, thank you very much.
Thank you.
Senator Susi, are you here? Oh, wait a second. Senator Ricciardi? Did you have a question for Senator?
Just wanted to mention that you have an amendment in your binder that changes the effective date to next.
Senator Susi, before you leave, are you here to testify on this bill?
On the next bill, Mr. Chairman.
Okay.
So I'm not leaving, I'm not going far from
Yeah, but I've kicked people out because there weren't any chairs, but I would offer you the seat next to Senator Rosenwald if,
and I greatly appreciate that. I'm gonna chat out here and let you.
all right, Senator, thank you. Then I guess we don't have any questions for you.
Thank you very much.
Okay, going down to the bottom of the list, or near the bottom of the list, State Treasurer on there. Monica, are you here? I'm right here. I have an option for you. You can either testify now, so give us a pre-brief, or you can wait until near the end so that you can wrap up, and it's up to you whether you'd like to do it now or till later.
I think I'll prefer to wrap it up. I think
Okay.
that'd be more helpful for the.
We'll put you at the end then, okay.
Yes, thank you, appreciate the effort.
All right. Chuck Nickerson?
My name is Charles Nickerson. I'm the Finance Director for Rockham County. I'm the Finance Director for Rockham County, and I'm representing the New Hampshire Association of Counties. On behalf of the association, our position is that we are against the bill. Basically, I believe, and I believe that others on the association do believe that this will, in effect, kill the public deposit investment pool. Because if you're going to require 100% of bank deposits, 100% of the investments be in New Hampshire bank deposits, that, basically why would any city, town, county invest in the pool if you still have to worry about management fees from the broker? So why wouldn't you just directly invest in the banks yourself as, the town, city or county? So that's, a major reason. So, basically, there could also be a revenue hole on the, for budgets for cities, towns, counties, because there is a difference between as far as a, regular deposit account with a bank and the, average 5% that right now that the pool is yielding. So again, I understand there's been a report that's been issued that forecasts large returns, but there's no guarantee with that. There's no guarantee, I believe, as far as the amount that banks would actually turn around and, have as new lending. I mean, it would only make sense for banks to lend whatever amount that would be, make sense for them, for their operations to maximize their returns too. So again, I do see this as basically ending the pool, because again, why would you put monies in if then you have a further decreased return, because you do have a small amount that goes towards management fees. And, again, being a county, that's what I would end up doing, is if this bill went to play, was passed as written, I'd be recommending that Rockham County pull all of its monies out of the pool and put directly into the bank. I also believe that this already, cities, towns, counties, we can only invest in certain instruments already. There's only a limited number of avenues to invest. If you basically take away this way of trying to maximize the yields or diversify our investments, I mean, again, I think in the short run, there's definitely, could be a hole in the revenue side of budgets. So, I mean, I would hope, obviously that whatever, if this bill passed in whatever form, that, eventually there could be some net positives, but I don't see it in the short run.
Okay, thank you. Questions from senators? All right, thank you very much.
Thank you.
Next on the list is Mike Shelton.
Good afternoon, Mr. Chairman, members of the committee. For the record, my name is Mike Skelton. I'm the president and CEO of the Business and Industry Association of New Hampshire, our statewide Chamber of Commerce, State Manufacturing Association, here today in support of this piece of legislation. I have prepared testimony that I've submitted that will be shared in light of the amount of speakers you have. I'm not going to read it. I just want to emphasize a couple of key points and why we're supporting this legislation.
And just let me comment on that. And the rest of you, we appreciate written testimony. It goes in, it's given to the senators, can be distributed, but it's also available on a drive where the senators have access and that we use to archive the stuff. So paraphrasing is a good thing. Brevity.
Perfect. I'm glad I'm earning points on that regard. So just to emphasize two key points, I think all of the issues that Senator Rosenwald and Senator Riccardi laid out are very much in line with why we're supporting this legislation. The potential positive economic impact, I think, is real and significant and matters to our business community and would have a positive impact on growing business, growing economic activity, the ability for businesses to have lending opportunities within our banking sector is important, and it allows them to grow. So if this is going to inject capital into our banking sector locally, that's a good thing. And so I think we've reviewed the research by Polycon. We had a presentation to our policy committee. I have some really smart people on that committee who've looked at it closely, and we think it's significant, notable, and a very good reason to strongly consider this legislation. The second issue is I just want to step back, and what occurred to us is, as an organization that champions free enterprise and fair competition, and that looks at public policy very closely, there were a lot of people in our organization that were pretty surprised to learn about PDIP that had very little knowledge or no knowledge of it. And from the speakers earlier, I think clearly this was created for a specific purpose more than 30 years ago, but it's evolved and changed, and it's now holding a great deal of funds. It's functionally serving as competition to our banking sector. And I think that poses some challenges and questions that this legislation needs to consider. That if we have a state-backed pool or fund that is presenting competition to our banking sector, that has a cost. And the competition, in our view, is not totally level. These funds are not collateralized. They're not held to the same standards that other banks and financial institutions have to follow. I think there is certainly good policy reasons to have some sort of investment pool as it is offered today for municipalities to be able to take advantage of. But the question is, how is it structured? And is it structured fairly so it's not unfairly competing with our banks and financial institutions? And I think this legislation suggests a way forward where we preserve this option for municipalities while also ensuring that we're not unfairly competing with our banking sector, and we're also delivering positive economic impact to our state. I'd be happy to take any questions.
Questions? Senator.
Thank you, Mr. Chair, and thank you for taking my question. I'm not sure you can answer this, but how many others, do you know how many other states have participated in this program? And if so, how long and what were their returns?
In terms of how many other states have a similar investment vehicle for municipalities?
Correct.
I don't know that specifically. I think there are others who are going to speak later who could speak to that. But I do know, and it was part of our policy review discussion, that there are other states that are considering the same issue of looking at should funds being driven through some sort of investment pool be tethered to local financial institutions so that the state itself is benefiting from that economic activity. So I think really what has caused this issue to bubble to the surface is, as was alluded to earlier, 10 years ago there was a couple $100 million in this fund. Now there's $500 million or more than that in this fund. That's clearly dollars that otherwise would be somewhere else in our financial system. And so it's really brought it to the fore that now's the time to revisit this issue.
Okay, I have a question. So leveling the playing field is one of the things that you said. And if I require them to insure the money or guarantee the money, what else do I have to do?
I think that is a starting point of the conversation, and there's a lot of folks who work in the banking sector here today who could speak to, from a more technical perspective, of how to ensure the fund can continue to offer the service it has while also being balanced and fair. So I think the comment that Senator Riccardi made earlier underscores the point that having funds securitized and insured is kind of, I think, foundational when it comes to a fund like this, and is certainly foundational for the banking sector. So I think that's kind of where we need to start, and then consider, what other changes need to be made going forward.
The question that I asked Senator Rosenwald at the beginning about interest rates and the difference, do you know what the figures are?
I don't know specifically. We did discuss that as part of our policy review. I think the Bankers Association and others may be able to speak to that. It's very situational, in my view, depending upon how much funds you're depositing, what yield you're trying to chase or trying to gain, what your liquidity requirements are. But at the end of the day, do I think it would be competitive with the current interest rate that folks are gaining through the pool? I think yes.
And the other question that I asked about the percentage, right now the bill requires 100%. Is there, the ability to change that and to come up with a different, certainly part of the bill is to report how much of the money is in state investments.
Right.
I think it's maybe line 25 or whatever it is.
Yeah, the percentage, I think, is a policy decision for this body to consider. Changing that percentage would impact the potential economic impact. So it's balancing what is the right percentage with what do we want to see in terms of value and gain for economic impact.
Okay, additional questions? Seeing none, thank you very much. And we'll move on to Belknap County EDC, Justin, I'm going to say Slattery, but I don't know if I'm right.
You're right. Good afternoon, Chair and members of the Finance Committee. My name is Justin Slattery, and I'm the Executive Director of the Belknap Economic Development Council. Good to see you all today. I will paraphrase as well, but I have a letter that I will submit. I'm here today to express my strong support for SS 553. We believe it'd be a wise decision, if you will, or legislation to really provide some great opportunities here in New Hampshire. 3 points I wanted to highlight is one, by passing this bill, it will strengthen local businesses by keeping taxpayer dollars within our region, help support and strengthen local businesses through increasing access to capital, which allows our businesses, which are the backbones of our communities, to expand and grow their operations. 2, we believe it will help support local investment, which directly translates into job creation and retention, which is so important. It will, really allow our businesses to, our banks to be able to work have more opportunity, more access to capital to support our small businesses, allowing them to grow and add employees, contributing to our local economies and our community, and growing economic stability. And then third, I'll note that it will also help support our infrastructure by allowing more investment locally, which will support infrastructure development and address specific needs in our communities. We really think it's a win-win. And so, in conclusion, I would urge the committee to consider the long-term benefits of keeping taxpayer dollars invested locally here in New Hampshire. We believe the strategic approach will bolster our local economy and contribute further to the prosperity of our state. Thank you for your time and consideration.
Questions from committee members? Seeing none, thank you very much.
Thank you.
PFMAM, New Hampshire DIP, and I think there's 2 of you. Maybe, are you coming up together? Or? Yeah. Okay.
Good afternoon. My name is Katja Frock, and this is my colleague Beth Galpern. We both work for PFM Asset Management, who currently serves as the investment advisor and program administrator for the New Hampshire Pool. PFM Asset Management has over 40 years of experience providing investment advice to local governments across the country, including 245 public entities here in New Hampshire. Myself, I have over 20 years working with local governments, and Beth has over 35 years working with local governments here in New Hampshire. When we look at the pool, as Senator Rosenwald pointed out earlier, it was developed over 30 years ago with a very specific purpose, and that was to provide local governments in New Hampshire a safe, viable, and alternative option to bank deposits for short-term investment of taxpayer dollars. At this time that it was created, there was a lot of uncertainty in the banking sector following several bank closures. I think we can all agree that the industry has been improved much since then due to additional regulation, but I think what last year showed us is that banks are not fail-safe. You'll find local government investment pools like New Hampshire's in almost all 50 states, with the very objectives of safety of principal, providing adequate liquidity, and earning a competitive rate of return as their objectives. And accordingly, the permitted investment types utilized within those funds are similar to those permitted in the investment policy for the New Hampshire pool. The success of this pool is actually owed to the foresight of this legislature for creating a very thoughtful, useful, and beneficial program that has and continues to meet the distinct needs of public entities in New Hampshire, and also to the strong oversight that's provided to the pool by the state treasurer and previously the banking commissioner and the pool's advisory committee, which includes members from the New Hampshire Banking Association. Every entity that invests in the pool is given the same market rate of return regardless of their size. There's no negotiating rates across entities based on their relationship. So the success that we can point to that the pool has had over time in its 30 years of existence, not a single penny of public funds has ever been lost. Daily liquidity has never been an issue. Last year, public entities withdrew over $500 million to meet their daily cash flow needs without one single issue reported. And then finally, last year, the pool earned New Hampshire entities over $30 million through investing in the pool, which ultimately benefits the taxpayers through that additional income not being needed to be generated by raising taxes. So in summary, we think you would agree that the pool is working as it was intended to. This bill requiring the pool to be invested or deposited in New Hampshire would limit the permitted investment types to solely collateralized bank deposits, which in turn would then impact the pool's objectives of safety of principal, liquidity of funds, and offering a competitive yield. It is very possible, given these investment parameters set forth in this legislation, as others have pointed out, that the pool would cease to exist. Safety of principal means minimizing risk. One of the primary tools used to minimize risk is diversification. This legislation limits the available investment types to a single sector in a single state. Furthermore, the pool is currently AAA rated by S&P. This is the highest rating that's available for pools. To maintain that rating, the investment advisor would have to limit the exposure to collateralized bank deposits for banks with credit ratings lower than A1 to 10%. Per the FDIC, there are currently 43 banks doing business in New Hampshire. Of those, only 3 have a credit rating of A1 or higher. That means 90% of the assets of the pool would be placed with either Bank of America, JP Morgan Chase, or Toronto Dominion Bank, all very large global banks with footprints well outside the state. Liquidity could also be impacted. While the purpose of collateralized bank deposits should provide for funds to be available, it's unclear if the banks could enter into agreements with the pool to guarantee the pool same-day liquidity that we could then pass on to the individual investors within the pool. The pool's ability to offer a competitive yield would likely be the most impacted. The yield on the pool would be solely driven by the rates that banks would offer to the pool for deposits. The question then becomes, would the banks offer the pool, their competitor, the same or better rates than they would offer a public entity that approached them directly for a deposit? So in summary, if the pool is no longer considered a safe alternative investment, and if it cannot ensure daily liquidity, and it cannot provide a competitive yield, the assets currently in the pool would dwindle, and without a mandate to use the pool, it's unlikely that it could continue to operate. So we're here as a resource to the committee. We don't take a position one way or another, but we provided some written testimony for you to review that supports the arguments in this. And I also brought along an article that was just published today by another outside entity on Senate Bill 553.
Question?
Yes, if I could. What is the rate of return that you're experiencing in the fund?
Right now, it's a 5.4%.
Okay. And the liquidity, you've never had a liquidity issue at all?
We have not.
10% is your requirement?
Correct. So the GASB 79 rules dictate that the pool must maintain daily liquidity of at least 10% and weekly liquidity of at least 30%. What PFM does is we monitor the fund over time. So we've managed the fund since 2015, and we look historically to cash flows coming in and exiting the fund. And we also are in contact with our investors regarding large deposits and or expenditures from the fund. And depending on the results of that analysis, we can increase that daily liquidity or weekly liquidity requirements. It's also dictated by market events. When rates go up, we want to be short in order to take advantage of those rising interest rates.
Okay, could I follow up?
Absolutely.
The largest participant in the pool, what percentage of?
Currently, it's about 6%.
So if they were to pull all their money one day, how long would it take you to regenerate the 10% liquidity?
I would have to check with our trading desk, but we do check that to make sure that they have the liquidity available to meet that in case there was a large withdrawal like that. I can get you more information on it.
Okay.
But I'm sure based on our parameters of making sure that we're having those funds liquid, and part of that is supported by having treasuries and agencies in the portfolio. They're highly liquid investments that we would be able to generate that cash if needed.
Thank you.
Sure.
Just doing the math, if your weekly liquidity is 30% and this fund pulling 6% out, it would be, the way I do the math real quick, it would be less than a week. Is that,
To regenerate, yes.
Senator?
Thank you, Mr. Chairman.
Which one of us?
It does, you can flip a coin.
I'll defer to the.
Thank you. Thank you for being here. Looking at the S&P Global evaluation from this past September, they have a note saying, generally when faced with an unanticipated level of redemption requests during periods of high market stress, the manager of any fund may suspend redemptions for up to 5 business days or meet redemption requests with payments in kind in lieu of cash. What would a payment in kind in lieu of cash look like?
Sure.
If the city of
Sure.
Nashua wanted to redeem its money and you put a pause.
Sure. So I've heard a lot of questions about collateral when we before we approach the podium here, and what I would tell you is that the pool is unlike a bank deposit in that the dollars don't go anywhere. They're invested directly into securities. So when an investor puts money into the pool, they become a shareholder, and each share entitles that shareholder to a piece of the underlying portfolio of securities. So in the event an in-kind would need to happen, they would receive a proportionate share of the securities in the portfolio if cash could not be generated.
So, follow. Let's say it was, I don't know, some government bond. If I wanted to get my city's cash out, but you had to pause redemptions, I would get some piece of a government bond or a stock.
No stocks. Stocks
No
are not.
stocks.
No,
Okay.
stocks are not permitted as part of the investment policy.
Bonds
Everything
are-
that the pool invests in actually has to have a weighted average maturity of less than 60 days.
Okay.
That's what we're required, the parameters of the pool to keep. So everything's very liquid and turning over fairly frequently in the pool.
So I wouldn't get my cash.
We've never had an event in New Hampshire's history or in any of the pools that PFM Asset Management has managed where we have not been able to generate the cash requests for the depositors in the pool.
Thank you.
Sure.
Senator?
Thank you, Mr. Chairman. You made a statement, and I just want to see if I got it properly, about the 43 banks. Could you reiterate that, please?
Sure. So we did an FDIC search of the banks that are doing business in New Hampshire, and I included the spreadsheet in the materials that I provided as written testimony. We also had S&P review those banks to see if they were rated. If a bank is not rated or it has a rating that's lower than an A1, so an A1 would be the highest short-term rating that they can have, the pool could only invest 10% of its assets in a combination of those entities. So what that means is, go ahead, you have a question.
No, just finish it.
Okay, so what that means is to maintain that AAA rating that the pool currently has, 90% would be allocable to the only 3 banks registered and doing business in the state that have a credit rating higher than A1.
That's really what I wanted to hear.
Sure.
Only 3 banks?
Only 3 banks in New Hampshire currently have a rating high A1 or higher.
Okay, great. Thank you, Mr.
And
Chairman.
those are the 3 you listed before?
Correct. Bank of America, Toronto Dominion Bank,
Okay,
and JP Morgan Chase.
okay, thank you.
Any other senator have a question? And then I get to ask my questions. Do you have any idea of what the current percentage of investments in New Hampshire are in fund?
So the fund, are you asking me if we invest in?
Part of this bill says that you need to, declaration of the amount of the funds invested or deposited within the state of New Hampshire. So you have any idea of what that number is right now?
So I would tell you that none of the current investments that are used in the pool right now stem from New Hampshire entities.
So 0.
Correct. We do buy commercial paper from TD Bank, who is a bank that operates here in here in New Hampshire. But no, I can't say that that commercial paper was issued from the branches that do business here in New Hampshire.
And much as I invest in mutual funds and get back some of that money, although you don't know what the percentage is, could be invested in New Hampshire.
That is correct.
Okay. That's the last question I have. Thank you very much.
Thank you.
We want to check the sheet to see if there's anybody else signed up. But before we go to the state treasurer, we actually have the Hampshire bankers. Come on down. Welcome.
Good afternoon. Thank you, Mr. Chair, honorable members of the Senate Finance Committee. My name is Christy Merrill. I have the honor of serving as president and CEO of the New Hampshire Bankers Association. We represent 40 member banks that employ nearly 6,000 employees in New Hampshire. And with me today is Chris Logan. He's president and CEO of Bank of New Hampshire, and we're here to testify in support of Senate Bill 553. We do also have a letter to share. I think Ryan just stepped out of the room, but we'll give that to Deb. There are 7 chambers of commerce that are in support of this legislation as well, so we'll make sure that you all have a copy of their testimony. You're hearing a lot about the background on PDIP, which I won't get into too much today, probably hearing more than you've ever heard before. Most folks really aren't familiar with PDIP. I do want to talk about a few things that you may not know about the pool. As it's been mentioned, the pool was created in 1991, and the legislature has not really looked closely at their practices since that time. And many people are surprised to learn about a couple of things. One, you all just heard the investments in the pool, none of them stay here in the state of New Hampshire. People are surprised to learn that. The second thing that people are surprised to learn is that the taxpayer funds invested in the pool are not secured or collateralized. Insurance and security and collateralization are common practices by our banks when they work with municipalities. Banks are able to insure funds through the FDIC up to $250,000. They can invest beyond that amount using various products, and they can collateralize and secure funds. There is a cost to secure the funds, and that may impact the rate that banks can offer. We've heard a little bit today about safety, liquidity, and yield, and I just want to talk about safety. As it's been mentioned, the PDIP is an investment tool that's been named in statute, and it's also common for the New Hampshire PDIP to use the state seal in their materials. And so we do hear from members, from member banks, who work with finance officials and who are surprised to learn, and I think confused by the fact that the funds are actually not backed by the state of New Hampshire, nor are they insured or collateralized. I want to also just talk a little bit about liquidity. It was mentioned earlier that in S&P Global's pool review of New Hampshire PDIP, when there is an unprecedented level of redemption requests during high periods of stress, the manager can suspend redemptions for up to 5 days or meet requests with payments in kind. And I'm not quite sure exactly what that means, but that was discussed a little bit earlier. And also what was mentioned earlier is that the daily minimum liquidity standard is 10%. And with information from last September, we know at that time, the top two largest contributors were 9.5%. The second highest contributor was 6.6% of the fund. And so PDIP has said that they have not lost a dollar in the pool. However, it does sort of raise the question, if two of the largest contributors were to take their money out in the same day, would that cause a pause on redemptions going forward? We're not sure the answer to that. And then there's been some talk about yield and the rate. You'll hopefully hear from Brian Gottlob. You all should have a copy of our testimony along with the study that Brian conducted, along with the one-pager if you don't want to read the entire thing. But he talks...
he is here and he's
okay.
scheduled to testify next.
Okay, great. Well, I won't steal his thunder, but he does address the yield. And what his study demonstrates is that by keeping funds local, the yield is competitive, particularly when you take into consideration the impact to New Hampshire's economy. I do want to point out a couple things about Brian's projections, which you're going to hear about. So when he did the study last summer, the fund balance was $530 million. And so his projections are based on that number. The fund today, I understand, is over $600 million. And also, the other thing I want to point out is based on FDIC data, we know that for every dollar that a bank takes in, 90 cents of it goes back out into the community. But when Brian looked at the impact of the lending power that banks have in the economy, he only looked at the commercial lending piece, which is only 1/3 of the entire lending picture. So I'm saying this to you because the numbers are really good, but we think that they're conservative and represents about 1/3 of the picture. And so I guess when you look at the study and why does this matter? What does the study mean? Banks would like to be able to lend more out into the community, but they are not able to do so without additional deposits to deploy by way of funds. We've heard, and the Chamber's the letter speaks to that, and the BIA also spoke to that earlier, about how access to credit by small businesses is a significant concern. And if we know that there are additional deposits, that will increase access to credit by borrowers. The study and the legislation would result in nearly $200 million in increased credit available to small businesses and families. This could mean additional financing for developers, for real estate, to expand operations, and that includes affordable housing. And you all should have received letters from Steve Dupree and Eric Chinberg, and they are real estate developers who are in support of this legislation. It also means that it's additional revenue to cities and towns and the state by way of taxes. And these are new funds that Brian will explain. These are not funds that are previously accounted for. And it also means more jobs and increased personal wealth. So what would change as a result of this legislation? Today, as we've heard, municipalities in the state, they are not required to invest in the pool. It is an option. This will continue to be an option. They can invest inside the pool, they can invest outside of the pool, however they choose. However, if they do place their funds with PDIP, once the funds are deposited, the fund manager must secure the funds through insurance, or they must secure the funds. One of the questions that we've heard about is, if this legislation passes, what are the different types of investment options and deposit options that banks can offer? Banks will manage the funds as they are directed by the fund manager, but some of the options include, some of you may know, a checking, a savings, a money market, time deposits, CDs of various lengths of time. ICS and CDARS are both products to insure funds beyond $250,000. And there are also wealth management options if they choose to invest their funds instead of deposit. And Chris is going to speak a little bit more to that. Another question that's come up is, what types of institutions are able to receive PDIP funds? There are over 20 statutes that talk about the different types of funds, be they city, town, operating, reserve, school districts, cemetery funds, and the legislation talks about who's able to take those funds, and this does not change that, so that's unchanged. What that does mean is today, New Hampshire charter banks, large out-of-state banks, and out-of-state banks that have a presence here, large national banks, they can handle municipal funds, but they are subject to several requirements, so this legislation does not change that. And the last thing that I want to just quickly address, and thank you for bearing with me, is we've heard the comment about, there's been a question about how do we know that funds by banks are deployed into the community. And so my answer to that is, in part, is the Community Reinvestment Act. The Community Reinvestment Act is a federal law that banks are required to comply with. They are regularly examined. They receive a rating. They can either receive a rating of outstanding, satisfactory, needs to improve, or substantial noncompliance. And just really quickly, I want to share a line about how the FDIC explains what the CRA is. It's a law that's intended to encourage depository institutions to help meet the credit needs of the communities in which they operate, including low and moderate income neighborhoods consistent with safe and sound banking operations. So those ratings are public and the public can see those. There was a 2020 study by the FDIC that was looking at the relationship between community banks and small business lending. And I just want to share a quote that they had in that study, which says, "These local-minded banks focus on loans that build relationships. The loans tend to be larger and more hands-on, and they involve continued loan administration. The evidence indicates, therefore, that community banks continue to be key supporters of small businesses in their local areas, and there's no reason to expect this support to decline." Some of you all may be familiar with the Small Business Administration. The New Hampshire office, they regularly put out reports, and they have reports on their loan products, which support small businesses. Those are 504, 7A microloans. What else am I forgetting? But I've included with my testimony a report from the SBA from 2023, their year end, and it shows who holds the loan and what the size is. And I would just encourage you to take a look at that, because the picture that it paints is that banks with a presence here are lending to those small businesses in New Hampshire. And then I also just wanted to raise the fact that the SBA New Hampshire data during PPP, for just the five first months of PPP, there were almost 25,000 loans that were issued here. The value of those loans were just about $2.5 billion. 80% of those loans were held by our members who are banks with a presence here. In conclusion, the fundamental question that we think needs to be answered is, should we reclaim New Hampshire taxpayer dollars to put them to work for our economy, and should they be protected? We believe the answer is yes, and we hope that you'll agree. This legislation will not only benefit our local economy, but will foster a sense of security and confidence among Granite Staters. I understand that there's an amendment that's been brought forward to change the effective date to July 1, 2025, and we are in support of that amendment. So I know I went on for a long time, but Chris does have a few comments to make as well, and we're happy to take questions too.
Thank you, Mr. Chairman and members of the Senate Finance Committee. I'm
Just
just going to
move the microphone to point towards you.
Is that better? I'm just going to try to answer a few questions that have already come up that you've asked. We have written testimony we can put over there. The first question you asked about rates, so I would like to address that. When we speak about rates, I think we have to speak about rates over a period of time as opposed to a point in time. And when we think about that, we think about the yield curve. Right now we have an inverted yield curve, which is making the PDIP investment a little more attractive than bank deposits today, for sure. But if we looked over time, bank deposits have often been priced better than PDIP, or certainly comparable to PDIP. So, and during the pandemic, bank deposits were much more attractive than PDIP. So I think we should be a little bit longer in our view as far as where rates are. Second, I think when we think about rates, we also have to think about risk-adjusted rates. So there is no risk in a bank deposit. It has full FDIC insurance. So there's zero risk, and there is risk in the PDIP pool. So if you had a risk-adjusted rate of return, it would make bank deposits even more attractive. And then last, when I talk about rates, I think what we have to look at is we have to look at the study. And what the study clearly shows is it's not necessarily about what the rate is on the deposit account or on the investment account. It's what the rate of return is to the community. And we often hear from municipal officials that it's their fiduciary responsibility to get the best rate of return. With this study, we now know that their best rate of return is to deposit those into New Hampshire and have that reinvested into the state and businesses, that it grows personal wealth, it grows tax revenues, and it grows GDP. So I think that's the answer to the rate question. Sorry.
Before you go on, just because people talked about an inverted yield curve, that's the short-term investments are paying a higher percentage than the long-term investments, in case anybody was. And I never actually did get, if Rochester goes down tomorrow and deposits $100,000, what their expected rate of return on with a 60-day payback, I guess.
So you're saying from a bank?
Ballpark.
Are you asking from a bank? I mean, I can't answer that because it's not a public rate that we all, that we all fund to. Every bank has their own different rates that are out there. So that's, I guess, a question I can't answer for a global market.
Maybe somebody can answer that one to me personally afterward.
So
I'd
a few audits.
appreciate it.
Yeah. A couple other questions that came out. So market competitiveness, again, we talked about there's over 40 banks in New Hampshire that can accept this. That's a pretty big market. I can tell you I lived and worked in the Maine banking system for about 15 years before I moved to New Hampshire. There is no pool there. It's very competitive. So I don't think that's going to be an issue. Ability of banks to handle the deposits. There's roughly $48 billion of deposits in New Hampshire banks today. So this $600 million is a little over 1% of deposits. So that number is not a number that is a problem for banks in New Hampshire. Banks, are not fail-safe was commented earlier. That's true, obviously. However, and they was talking about the ratings. What I would say to you is we have FDIC insurance. So your rating, your S&P rating is not relevant in that regard because there is insurance on those deposits. Operability of the PDIP going forward. Could it operate under its current policies? I would agree, probably not. It doesn't mean the business can't evolve. You can buy commercial paper in New Hampshire. You can buy mortgage-backed securities in New Hampshire. You can obviously get bank CDs in New Hampshire. So I think it can still operate. It may need to operate under a different policy. I think that, and then, sorry, last question I wrote here. So you asked about whether or not it should be 100% invested in the state of New Hampshire. My answer to that is yes. The study clearly shows this is better for our state and better for our communities to take our tax dollars and reinvest them in our state and our communities. So I don't know what would be the rational thought when we look at the study to say we'd only want 50% of those to be reinvested into our state, to our communities. So my statement to the 100% investment in New Hampshire goes, it's better for our communities, and these are our dollars that should help grow our economy and help our neighbors. Happy to take any questions.
Questions from the committee members? Senator D'Alessandro.
Thank you, Mr. Chairman. You're from Maine. I served on the board with Mr. Ryan, who was the founder of Yorkie Bank, and just a great human being, and a brilliant banker, I might say. But Cindy, to you, this is a question that I get from small businesses in the greater Manchester area. They have a difficult time getting funds, a very difficult time getting funds. Now, in your testimony, you stated that small businesses were being taken care of. That's the antithesis of what I'm hearing. So kind of fill me in on what is the story? Because small businesses make up 80% of the businesses in this state. And if they can't get that resource, it's problematic.
So agreed. So, and I think to answer that question, this is great legislation to support that, because that's $600 million today that is leaving the state that isn't reinvested into our small businesses. That comes back, which provides more access to capital for our small businesses. So that's really the root of what we're speaking about here.
Further question, Mr. Chair. But the risk-reward ratio is considered, is it not, at the time you're working with the small businesses vis-a-vis your loan to them?
I'm sorry, I don't understand by the risk-reward.
The risk that you take in terms of granting the loan and the reward you get because of the percentage that you charge. That's how I figure it.
So absolutely, I mean, every bank has their own credit policy, and right, and they're gonna provide loans based on their own credit policy. Is that what you're asking? I'm not sure if I answered the question.
No, you did. Thank you.
And if I could add to that, Senator D'Alessandro, I would say, you know, one of the virtues of community banking is when a small business, they all have a relationship banking model.
Right.
And so when a small business comes in, even though, you know, the overall picture may not be like the most attractive loan, it's the community banks have flexibility. They know the person, they know what's going on, and there's an opportunity to kind of take a chance on them to help them get that loan. And that's why this legislation could be so impactful, is because there are some folks that are being challenged in getting loans right now, and banks want to meet that demand, and they want to do more by way of lending. But in order to do that, we need to see additional deposits into the system.
Sure. And I think the relationship issue, which used to be a key element in the banking business, has been diminished to some extent.
I guess I would say, Senator, that it's probably, you know, I think our members pride themselves on relationship banking. So, you know, maybe there are those that feel that way, but relationship banking is still incredibly important, and still how they do business. But not to speak for you, you can probably explain better.
No, I mean, I think what Chris said is right, which is that is our business model.
Sure.
Because if we were trying to compete against the large multinational or national banks as a community bank, I'm not going to win on price. So I have to win on having a relationship with that borrower and be able to provide the services that they need when they need them.
Okay, thank you.
Additional questions? And I get to ask. It appears to me, even though you say that the 600 million would only be 1% of the deposits, that trying to do this in, not in a phased-in manner, but would be detrimental to the economy and the results. Comments on that?
If the 600 million came into the system, is detrimental to the...
Like that?
I mean, if it came into the banking system overnight?
Yep.
Again, we're talking about 1% of overall deposits, so I don't see how that would be detrimental, and I can assure you that the banking system could absorb those dollars and put those back out to work in our communities quite quickly.
Let's see, I also have to worry about how it affects PDIP too, because the money that's in there is in there, and doing it that quickly may not, you may say that it's not going to affect you, but I kind of, you know,
Well,
think
and
that.
I think our amendment allows this to go on until, for about another 18 months, is that, so there is a timeline here.
Okay, I'll stop there for right now.
Thank you.
Great, thank you.
Thank you, Ness. Brian. I was just listening to you speak a week ago, I think, or a week and a half ago.
Where was that?
Community college.
Oh, yes. I hope you found that interesting. You don't have to say, please. For the record.
Of course I found it interesting.
For the record, I'm Brian Gottlob, and here representing Polycon Research. I do, some of you know me in another role as Director of the Economic and Labor Market Information Bureau. I'm not here in that position. I'm taking time off, annual leave to be here to talk on this bill. You have access to a study that I conducted on this issue. It is long. I'm not going to cover much of it. I do have a presentation that I could do, and I don't want to bore you. I suggest if you haven't read it, you read it at night before bed. It's an excellent substitute for a stiff drink or a mild sedative. When I was approached to do this study, it piqued my interest. I've done work for the banking industry in New Hampshire and some other states. And I looked into it, and what I found really interesting is when I looked at it, one, it was difficult to get any information just as a citizen on the PDIP and the investments that it contained. And then when I finally did get some information about it, I was surprised to see the breadth of investments around the world. So when I talked to some of my neighbors and some of the businesses I know, they were also quite surprised to know that their tax dollars were not being reinvested or used to benefit New Hampshire businesses and residents. And I understand, and it is perfectly appropriate for city, municipal, county finance managers to want to maximize their yield. So I did look at the yield differences, and I talked to bankers. I talked to some organizations that have deposits with banks and the PDIP. And one, it is very difficult to find out what the exact yield is for banks because it varies and it's negotiable. One of the things that I learned when I talked to some quasi-state organizations is that the rate that they were earning as of a few months ago was almost identical to what they were earning, what the PDIP had been advertising as their rate of return. So I certainly respect the finance managers wanting, individuals wanting to maximize their yield. This study, what it does is it takes a look at an issue that hasn't been looked at. And I scoured the internet, I scoured research journals, and could not find a study that specifically compared the yield on investments in organizations, and there are many of them, investment pools throughout the country, with keeping those dollars locally in state organizations. So that was very surprising, and to me, the critical issue here is, from my perspective, is what is the overall benefit? How do we maximize the benefit to those individuals who are providing these funds, who are taxpayers? And I think what this study makes fairly clear is that when you combine the yield that state government, local governments, county governments, agencies would get by depositing in New Hampshire banks, in addition to the economic benefits that they would receive if those monies were invested in the state, and you compare that to the yield on financial instruments that are invested throughout the world, you see that it's pretty compelling that the combined yield is much greater. And there were some appropriate comments that it doesn't mean there's an instantaneous return, but it's a longer lasting return. When you invest in a local business, when monies are invested in a local business, that business pays taxes continually. It continues, and there's a continual yield on that. So it builds, and it compounds over time. So just quickly to talk about the study, when I looked at it, there was $530 million in the PIDIP. How did I go about looking at the impacts? Well, I used some sophisticated econometric models. We know that if that money were invested in New Hampshire banks, 90% of that would be lent out. Now, 90% wouldn't go to businesses. I looked at 20 years worth of banking data, and about a third of the money that is lent by businesses by banks in New Hampshire was lent commercially to business entities in either real estate loans, commercial industrial loans, development loans. So taking that amount of lending, and anybody who knows the economy knows that what fuels economic growth is credit. And if you cut off credit, you cut off economic growth. So expanding credit generally increases economic activity. So that increase in lending increases gross domestic product. I calculated about $200 million in additional lending that would yield just under a couple $100 million increase in GDP. There's a strong relationship between increases in GDP and what happens to both state and local revenue. And so I calculated that relationship, and that would yield an additional approximately, if all of the money in PIDIP at $530 million were in New Hampshire banks, would result in combined state and local revenues of about $23 million over in a year, rising a little bit. And I have all those data elements in the report. I won't go through them here. But in addition, it will increase jobs and personal income. And when you combine the revenue yield with the yield that they would get from deposits in banks, that becomes a pretty compelling argument, I believe, for making those deposits or keeping those monies in the state, within state banks. And there was a question about whether the money would be lent elsewhere, and I thought Christy did an excellent job. Banks are required to make lending available. They're required to serve their local communities. So while 90% would be lent out, we can be sure that in particular that a lot of that money would go to organizations, individuals, and in this case, looking at businesses, and particularly small businesses. Small businesses have the most difficulty accessing credit markets. They can't access national credit markets. New Hampshire banks are really the lifeblood of small businesses. When I say small business, I'm using kind of a looser term, 1 to 50 or so. I know the SBA uses 500. I don't consider a business with 500 individuals a small business. But, you know, businesses of 1 to 20, 1 to 50, those rely on local banks. And adding $600 million to New Hampshire banks increases their liquidity, and we know the bulk of that is going to go it's going to be lent out. It will benefit households, it will benefit individuals, but the real economic impacts are going to be what happens to the lending that goes to businesses and small businesses in particular. And with that, I will stop. I've taken up too much time and answer any questions.
Questions from the committee members? Okay, you may have gotten them with all of the.
I did. Much like I did at the community college
Summary,
system.
it's good for New Hampshire, $23 million a year. All right, thank you. With that, before I call up the state treasurer, is there anyone else that wanted to testify that didn't? Come on up, sir. Jason, you come get this and have him sign in, please.
I think I signed in. I might not have said Steve, so it's Clay Adams.
Okay.
Thank you, Senator. Chairman Gray and honorable members of the Senate Finance Committee, it's a pleasure to be here today. My name is Clay Adams. I'm president and CEO of Mascoma Bank. We're a $3 billion asset bank with more than 400 employees. We're also mutually owned. And I'm here today to offer support of Senate Bill 553. As an aside, and I sometimes joke with my banking colleagues and other banks, I was a government major in college, so it's nice to finally be able to put that to good use here before you. I just want to provide a couple other points that I think provide important context, perhaps globally, for why this is critical for New Hampshire banks today. So we're all familiar with what happened in the COVID pandemic over the past few years. There was a very accommodative monetary policy that happened. Rates were very low. There was quantitative easing that happened when the Fed was ballooning its balance sheet to grow liquidity in the markets. And this was it's a very, very different time right now. Rates went up 11 times over 2 years, which was a more constriction than we've seen in 40 years. And also, we're now in a quantitative tightening point. The good news is that, well, that was all done in the name of trying to control inflation. The good news is that inflation is coming down, but the design is to shrink the money supply in the economy. And while that's, like I said, having its desired effects, it also has a potentially negative effect on New Hampshire's economy. And at the core, banking is the business of banking. We borrow short-term from depositors. We lend out longer-term to consumers, businesses, municipalities. Most banks in New Hampshire at this point have lent out 90% or more of their deposits, and it becomes less sustainable and less economically feasible for banks to continue lending to meet the demand of the small businesses that are out there if there are not deposits to gather. So that's the big question I have is, like, why are we allowing $600 million of deposits of taxpayer money go out of the state when that is so critically needed by New Hampshire banks today? That is, I think, really what's overshadowing a lot of the current environment. It's not going to get easier immediately. We all hear that the Fed may or may not reduce rates. It's going to take a long time. The ability to gather deposits will continue to be very difficult for banks. Loan demand will continue to outstrip the ability to gather those deposits, and that will potentially stymie the New Hampshire economy because those deposits will not be there to lend out. So these are deposits right here before us today, and I would encourage the senators to please consider this bill strongly for that very reason. I'm being brief here since it's at the end of a long hearing, but I will submit the testimony and happy to take any questions.
Questions from committee members? Senator Purvis.
Thank you. Thank you, Mr. Adams, for coming in today. So, Mascoma Bank, that's who you work for. What is your prime lending directive? Would you do mostly business or residential, home mortgage?
We do roughly equal commercial and residential. We do, on the business side, we do more, I would say, commercial real estate than other kind of types of commercial lending. Community banks as a whole do about half of the commercial real estate lending in the country, and as a cohort, disproportionately, they do more small business lending than any other type of bank.
Oh,
certainly.
So, do you feel having this infusion of cash, so to speak, into the lending system is going to help perhaps make more money available to our young homeowners who are looking for first-time mortgages?
Absolutely, yes. I think that the challenge when banks, like Mascoma Bank at the end of the year, was we were lending out 95% of the deposits we have. Banks have the ability to borrow wholesale from the Federal Home Loan Bank or other sources. That is very expensive, and so it becomes less economically feasible. And in the current rate environment, with the yield curve being inverted, it becomes challenging to continue to kind of operate the way we traditionally have.
One more follow-up, and then I'm done.
Sure.
So would also having this money available, and I don't really, I'm just curious how this would impact the lending interest rates. Will that make more attractive rates on mortgage, or will it just provide more cash to fund those?
It will be primarily provide more cash to fund those. The pricing of mortgages for a home is more dictated by macroeconomic factors than it is the deposits, but it makes those types of lending activities more sustainable for New Hampshire banks.
Thank you.
Additional questions from the committee members? Seeing none, thank you very much.
Thank you.
And at long last, we'll call up the state treasurer.
Good afternoon, Mr. Chairman and members of the committee. For the record, State Treasurer Monica Misapelli. And thanks for the opportunity to speak at the end, so I think I'll summarize my testimony pretty quickly. To begin, I just want to mention that the state treasurer does not take a position on this bill. We will simply follow the direction of the legislature. This is a policy decision, so my goal today is to just provide additional information that might help you as you consider this proposal. So you've heard from the experts already. One of the items I wanted to cover today in my presentation was a little bit of the technical aspects, but folks from PFM Asset Management provided some information for you to understand how the pool operates. And so when the pool was established, this was under the oversight of the banking department, and it was just during this current fiscal year that was transferred to the oversight of the treasurer with the assistance of the advisory commission. There's a committee that we meet on a quarterly basis to review the activity of the pool, of the New Hampshire pool. I just want to reiterate what this vehicle is. So this is required by statute. Is the New Hampshire pool of the PIDIP is operated by an investment advisor and is managed very similar to other local government investment pools or LGPs, and as you heard, they're all over the country. So participants in the pool commingle all the public funds. They own a proportionate share of those funds, and they benefit from the economies of scale. So what I want to talk about a little bit today is the services that are part of this program. In order to operate a pool, in order to operate the New Hampshire pool, we need to hire an investment advisor, but we also have to hire an auditor. The investment advisor actually provides the services of active management of the portfolio, record keeping, custody of assets, again, legal and the auditing services. So all of that costs money to be able to operate the pool. And right now, the program management advisor service fees are asset-based, and that range from 25 basis points for the first 150 million, and then is reduced as you add assets to the pool. It is reduced to 12 basis points or 0.12% when you reach 1 billion and 50 million. So that's to cover the cost of running the pool. There are a few extra services that are paid separately, in addition to reimbursing the Treasury for a little bit of the administrative cost. The other point I want to mention in fiscal year 23, as you heard before, the assets in the pool reached 530 million, generated 19.7 million in income to New Hampshire participants, and incur management fees of about 1 million. So that's how much it costs to operate the pool in fiscal year 23. The other piece I want to mention is how the state of New Hampshire, how the pool benefits the state as part of the investments that we have. So the New Hampshire pool is another option for the state to invest, diversify its investments. The state shares in the pool represent about 40 million, which is about 4% of its liquid funds. And as you know, and you probably heard me saying this before, we do business with most banks. We have approximately $1 billion in deposits with New Hampshire banks. And of those deposits, about 100 million are with state chartered banks or banks headquartered in New Hampshire. So we do a significant amount of business with New Hampshire banks already. So what I want to mention is just the portion that we have in the pool is relatively small compared to our deposits in banks. And I'm sorry. So the other piece that I can share with you is, since we do business with most banks, I mean, we have to, the difference between what the pool pays currently is about 5.4%, compared to what local banks pay is different. What right now local banks are paying, the state of New Hampshire is between 5.25% to 0.25%, and it all depends on, every bank is different. And the factors that appear to influence those decisions may include lending demand, the cost of collateral, or simply just their business strategy. So every bank will offer us different rates depending on whether those banks want our deposits or not, or whether they prefer to do business with us and not accept our deposits. They prefer to have, again, services and make money in a different way. So to clarify, again, this is a policy position, a policy decision, and what appears to the Treasury is that this proposal will potentially impact the objectives of the pool currently, which is meet safety, liquidity, and the ability to maximize the rate of return. It is possible that this pool with this proposal will lose the credit rating that it has, which is the highest credit rating for an investment vehicle like this one. This is an investment vehicle that is comparable to a money market fund. So it can't really be compared to deposits. It's really, a portfolio where all these funds are commingled, and just the difference between a mutual fund and this portfolio is that the locals and the state own a share of this money. So to conclude, again, if this proposal were to pass, I heard there's an amendment trying to change the effective date of this proposal. But if it passed the way as introduced, we may need to perhaps, if the investment advisor determines that the provisions in the existing proposal can be met, then we will have to probably amend the contract or terminate the contract. If the contract is terminated, we will have to try to find another investment advisor to run the pool according to this proposal. The other consideration it will be to if the pool were downgraded or if the rating is impacted, there's a possibility we may see large redemptions and withdrawals, which would increase the cost of running a pool like this. So what I just want to add to this discussion is consideration should be given to the cost to really run this pool. If the intent is to increase deposits, perhaps an LGIP may not be the vehicle that will achieve that objective. And just to summarize my remarks, we are required, I'm required as the state treasurer and members of local governments, we are required to invest in the best interest of the state or governments. So looking for a higher yield is typically what we consider as part of our investments. From the state's perspective, we seek to diversify our funds and not put all of our eggs in one basket. So, again, I just want to reiterate that we're not taking a position on this bill, knowing the intention of what this bill is trying to do. I believe I have a lot of friends in the room, so I want to make sure that's clear. And again, my goal is to provide you with additional information. Hopefully, this helps your discussion. I'll be happy to take any questions.
Questions from committee members? So, if instead of having one effective date, I had an effective date for the policies but not the percentage, and then a separate effective date for the percentage sometime in the future, would that help that glide slope and be able to make a good transition from those who want now to not invest in the PDIP but either directly to the bank or for the PDIP to make arrangements with the bank? Would that glide, make a positive change to the bill?
I think extending the effective date of the bill will help. Whether the percentage, I'm not really clear. I am fully understanding what that will do.
Well, to clarify my question, right now the bill would say on the effective date you have to have 100% of your deposits, in New Hampshire entities, okay? And what we would normally do in this kind of a situation is we'd say, okay, here's the rule, okay, and these are the ones you're gonna have to follow, but the end result, you know, when you have to fully comply with those things is at some time in the future from that date. Would that help both you, maybe not the bankers, because they're anxious to get the money as soon as they can, but the PDIP?
I think one effective, again, I will have to probably verify that with the investment advisor, but I think, again, one date extending the ability to transition, to try to figure it out. Some of these positions will have to be liquidated, review the requirements of liquidity requirements and all of the various requirements in order to operate the pool. All of that needs to be reviewed, and that will require time. That, again, that also will show the interest in how many depositors will stay in the pool.
That's good. We'll discuss it in executive session, maybe not today, but in some time. Senator, you had a question?
I did. Doesn't the reprocurement of the PDIP contract, doesn't it happen at sometime during June of next year? So extending the date by a year would coincide with going out to bid again?
That is correct, Senator, yes.
Thank
So
you.
we will have to rebid the contract.
Okay, seeing no other questions, thank you very much.
Thank you very
And
much.
since we've already asked for people who want to testify, we will close this hearing, and in a couple of minutes, we will start the next. Senator Susie has been waiting patiently. Oh, for those interested in how many people signed in support online, there was 184 signed in support and 4 that signed in opposing, and on the in support. And with that, we will start the hearing on Senate Bill 552, and we have the prime sponsor to introduce herself and the bill.
Thank you very much, Mr. Chairman, members of the Finance Committee. I'm Donna Susi, representing Senate District 18, and I am happy to present Senate Bill 552. This bill actually came about last summer, around June-ish, as a result of some discussion with the LBA, looking at where there was potential surplus in the budget. I know there is a House bill dealing with the Education Trust, and this is in no way like that bill. And I'm also cognizant, as are all of you, that there is the potential for changes to our education funding formula potentially down the road. But certainly in the short term, I think that there is truly a need to do more regarding teacher shortages and trying to retain teachers. So in an effort to try to identify some funds that are education related, but that could be used to fund programming around the issue of teacher shortage and retention, that was sort of how this bill came about. So I do have a copy of the Education Trust Fund Comparative Statement of Fund Balance, and I know the number 175 jumps out. That was also as a part of a conversation with the Legislative Budget Assistant. The Senate's current beginning balance for July 1st in the Education Trust Fund was $183 million. Hence the 175. Anything above that, we thought that would be a reasonable number at which to start. So what the bill does is say that at the end of the fiscal year, funds in excess of $175 million would be transferred to an account created in the Treasury that would be a designated fund to deal with the issue of teacher shortage and retention. And that would be overseen, obviously, by the Commissioner of Education, but with the advice and consent of an advisory group. We've considered several pieces of legislation. Certainly the Senate Education Committee has, as has the House Education Committee, and that was the reason for the creation of that, to inform the decisions of the Education Commissioner and how we could continue to grapple with this problem. We know it is a statewide problem. There are shortages in some pockets that are even greater in rural areas of our state. And I view this as a way to use existing funding within the budget to deal with what I think is a very important policy issue around our state. So with that, I'm happy to answer any questions, and I'm also happy to share this document with the committee just as a refresher, which has both the governor's numbers, the House, the Senate, so that you can see where the number came from and how we came about the 175.
Okay, thank you, Senator. Questions from committee members? All right, thank you very much.
Thank you very much, Mr.
Oh, Senator Bradley has changed his mind.
Yes.
Good afternoon, Senator Susi. As you recall, you actually broached this idea in the Retirement Commission with the potential of funding the Group 2 benefit out of the Education Trust Fund. Are you concerned, especially in light of the Superior Court decision on education funding, that opening the Education Trust Fund up even for this purpose would allow the diversion of Education Trust Fund dollars into other potential avenues in light of the court decision? Are you not concerned about that?
It's a very fair question, and I think as part of the discussion around retirement, we were kicking around any possible revenue source. I do believe these funds should be solely devoted to education. And I think ensuring that there's adequate staffing in our communities and assisting local communities with programs to deal with shortage and retention is critical. Because it's limited to what I consider an educational purpose, I'm less concerned, Senator. I am obviously very cognizant of the fact that we are going to probably, regardless of the makeup of this legislature next session, be dealing with education funding questions. And obviously, this would be a part of it. I think it's a modest measure in the short term for this year that could go a long way towards helping what I think is a really difficult problem for a lot of communities.
Follow up?
Follow up. So we have Senate Bill 217, which is a little narrower than your bill because it's a rural incentive that is funded with general funds. Wouldn't you think that in light of the Superior Court decision that if we're to put any dollars into a teacher retention program, that it would be better with general fund dollars as opposed to trust fund dollars, especially given the magnitude of the numbers that we're talking about for education funding?
Well, Senator, at this point, I think that piece of legislation obviously seeks general funds. There are going to be a number of competing interests that this committee, in its wisdom, is going to have to look at dealing with surplus funds. And I think that for this very limited purpose, it's appropriate to use education trust given, and certainly the committee is going to, I'm sure, spend some time discussing this and other education-related issues, so I would certainly ask you to consult with the LBA. I think the amount is actually a very modest amount, and I do think it is appropriate at this time to use education trust fund dollars to help fund the hiring and retention of educators.
Thank you.
Any additional questions from the senators? Senator Pearl.
Thank you, Mr. Chair. Thanks for taking my question. So looking at the fiscal note, we'd be looking at almost $50 million into this fund by the end of fiscal year 25. What do you envision that this newly formed commission, what do you think their recommendations would look like for the retention and keeping of new teachers? I mean, you have any thoughts on that?
Well, there has been a great deal of work done. There was a study committee. They were trying, I think, to focus in the bill that Senator Bradley referenced, particularly on rural areas. But that's why I thought that the commissioner, with the advice and consent of legislative members of both Senate and House Education, would be better suited. Because the needs of a rural community may differ with those of a community like Manchester, and I think the program could be tailored to meet those very different needs.
Follow-up?
Oh, and I understand that. It's certainly not going to be a one-size-fits-all. $50 million is a lot of projected money to throw into, a situation like this. I'm just kind of curious how you think we'd spend it.
Well, that's obviously a projected number. We had to start somewhere. So in the first year, you're talking about $8 million total. And as was noted earlier, I think that there is the potential for change to the way the Education Trust Fund is structured and how money is returned back to cities and towns for funding education. That would have to be part of this discussion, so that may be curtailed into the next biennium. But for now, in the short term, I think a few $1 million that is already existing and potentially deemed as surplus would be best used in this way.
Thank you.
Seeing no additional questions, thank you very much.
Thank you very much, Mr. Chairman.
We have David Trumley. Welcome.
Well, thank you very much, Mr. Chairman and committee members. My name is David Trumbull. I'm from the town of Ware, and I support this bill. I think it addresses an important need in New Hampshire's schools, and it uses a good funding source to do that. Before going into that, I just wanted to go back to a little history. I was looking back at the original Education Trust Fund bill, which was created to ensure that New Hampshire lives up to its constitutional duty to provide an adequate education to all children in the public schools. That bill came about after the first two Claremont decisions, and then they created the Education Trust Fund. In the original Education Trust Fund bill, they also created a commission. It was called an Adequate Education and Education Financing Commission. Now, that commission was bicameral, so it was House and Senate. It was Democrats and Republicans. It had a distinguished group of committee people from the community. I believe Senator D'Alessandro was on that committee back in 1999. And what they came up with was a 150-page report, and they looked at basically what is an adequate education, how do we make sure that children who don't get that right now, because there's variations between towns, and they looked at how do we finance that. So the Education Trust Fund was set up pursuant to our obligation to fulfill the constitutional duty under Claremont, and the money was supposed to be used solely for education. And I just came today because I know there's another bill in the House that wants to take surplus from the Education Trust Fund.
We're not going to talk about what's in the House right now. We're going to talk about this bill, sir.
Thank you, Mr. Chairman. I was just going to make a contrast, which was to say that the reason I support this bill is it takes this money and uses it for the purpose that the Education Trust Fund was specifically set out to do, which was to meet our obligation under Claremont. And I appreciate the question from Senator Bradley to Senator Susi about what about the Conval case? And I just think that these issues of adequacy of education, teachers, and reliance on local property taxes as the primary funding mechanism, they're all interrelated. And I will give you an example from my town. I live in the town of Ware, which is what you would call a low property tax town. In looking at the DOE statistics for area average wage comparisons, this is for teachers. Concord average salary for 22-23 was $84,900. Bow is $71,900. Goffstown is $63,900. Henniker is $61,700. Conval is $60,800. Merrimack Valley is $60,000. Ware, $53,600. Teachers in our town can easily make $10,000 going to any of these other places, $15,000, $20,000, or $30,000 more. We struggle to keep our teachers. We have some that have stayed in our town for 30 or 40 years, and my children were very fortunate to have them. But we lose a lot of our really good teachers. They come in when they're young, they just have their bachelor's or their master's and bachelor's. They stay for a couple of years. They say, I'd like to have a family of my own. They can't make a living in our town, so they go to other towns. So my point is simply this, that the property tax funding system, the teacher shortage, and the delivery of an adequate education are all tied together. And when they wrote the original Education Trust Fund bill and set up that commission, those are the very issues that they looked at and said, we need to find ways to solve it. And what they came up with in 1999 is going to be a little different than 2024, but the goal is the same, and the commitment to use that money is the same. So if this bill has a creative way of using that money to solve what is today's crucial problem, I think it's a good use of those funds. So that's what I'd like to offer for your thoughts.
Questions for committee members? Okay, thank you very much.
Thank you.
Brian Hawkins. Mr. Appleby, were you going to speak, or?
There were technical questions.
We'll bring you up at the end in case there is.
Great. Thank you, Mr. Chairman. For the record, Brian Hawkins, representing NEA New Hampshire. A lot of my comments, I think, have been represented already. There's obviously been a 2-year educator shortage commission that the legislature undertook, and they did issue several recommendations. One thing that I wanted to suggest to the committee is a starting place for this bill would be to fund some of the programs that you either have before you or have already passed, but they lack the in-house education. That's $5 toward the coffee fund, but and I'll mention two of them. Senator Bradley already mentioned Senate Bill 217, which you have before you. It was referred there. And then in House Bill 2, you passed in 21 and 8 the educator recruitment program, which was funded with remaining ARPA dollars. And obviously those are uncertain. And so a slight alternative approach here would be to have specific appropriations for those types of programs that could be predictable for, I think, the department to administer, and for those people who might be receiving funds, whether they be a loan repayment situation or in the other program that I mentioned, the teacher stipend program for student teachers, that there is a predictable pot of funding out there that they could count on. Folks already mentioned the educator shortage report. And so I'll conclude my testimony there, and happy to answer any questions.
Questions from committee members? Seeing none, thank you very much.
Thank you.
Before Mr. Appleby, we asked him if there's anybody that has questions for him. Is there anyone out there that didn't sign up and wants to testify? Okay. Mr. Appleby said that he was there in case any of the senators had questions. Are there anybody who has questions for the Department of Ed? Seeing none? All right. Very good.
Thank you.
All right. So that, let me read you. There was no additional people that signed up that didn't speak in person. There were 41 in support and one in opposition that signed up online. And with that, we will close the public hearing. We have, if we go into executive session, then we'll ask the Commissioner of DES to come up and answer any questions that we've got on the bill. And then Republicans are going to go into caucus for a short amount of time before we come back. So do I have a motion to go into executive session? Okay, we have a motion and a second. Senator Rosenwald moved and Senator D'Alessandro second. All those in favor of going into executive session say aye. Aye. All those opposed say nay. The ayes have it. We're in executive session. Come on up, Commissioner. And I apologize for not knowing how long that hearing was going to take.
I always get confused, is red to talk or green to talk, but I guess it's red.
So we're going to talk water.
Yeah.
Yeah. Okay, sir. What do you have for us on? Can we split the money? Can we get more out of the other people? Can we get more for grants? I'll let you vamp and then I'll ask them for questions.
Okay. So again, I know, just to remind the committee, so I know you had some questions that we had provided hard copies, or an email rather, which I hope are hard copy now for you, to answer hopefully a lot of your questions. As far as the funding, I think bottom line is it's still a work in progress. So as I want to remember, this is on Senate Bill 393. Remind the committee, as I said last time, it's envisioned to be just slightly less than a $38 million project. The original bill language was $25 million, with the presumption that between the trust fund, others, maybe federal funds, and the communities that would make up the difference on that.
Senator D'Alessandro.
The number you gave us originally was 37.6 million. Is that the cost now?
That's our understanding. Again, Mike, do you have any different numbers than that? I don't think so.
The only difference would be adding, if
raising the level of Lake Massabesic.
Right.
That would add.
Right. Now, as, further comments? As I understand it, Manchester Waterworks is okay with raising the level of the, by 2 feet? Is that what it is?
The study that we're funding right now with ARPA funds from the department for Manchester Waterworks is to raise the level 1 foot, I believe.
1 foot?
Yes. And that would generate roughly 1 billion cubic foot of additional storage for Lake Massabesic.
And would that allow for the 1 million more gallons to go south?
Easily. Again, this would add 1 billion cubic feet.
Okay. So the 1 million wouldn't be any danger to the Manchester water supply. It's consistent with the plan to send that south?
That'd be the intent, right?
Yeah.
Which would mean 4.5 million gallons a day?
So there's an additional 2.1 million gallons per day in phase 2. So that's this project, phase 2. And Manchester has that capacity now with the new riverbank filtration plant online.
Okay.
Yeah, so raising the level of Massabesic would be over and above that.
Okay, thank you.
Seems to me that there's like 3-something gallons in a cubic foot of water.
That's why I bring him.
So, just so that people, when we talk about cubic feet of water, what you're really talking about. So, okay, questions from the senators? All right, so.
A question for Senator Bradley. Senator Bradley, this is a work in progress, right? As we speak, there's ongoing discussions at this point in time. And could you bring us up to date on that from your perspective?
Well, my understanding is Commissioner Scott has worked with Senator Morse, who formerly chaired the Groundwater Trust Fund, on a possible amendment that would preclude general funds. So I don't know if you want to talk about that now or talk about it later, but I think it's safe to say for all of us that it is somewhat of a work in progress, and I'm glad the commissioner's here, but we probably don't want to take action on the bill, much before the deadline.
Okay. But the question, I mean, the answer is, it's a work in progress as we speak. There won't be any general funds at this point in time, and the discussions that are taking place are with all of the parties. The municipalities, indeed, would have to contribute. Is that correct?
Correct. To some level, that was always envisioned. As I just said, the original concept of the 25 million was general funds, and the communities and everybody else putting money together would be raising the rest of that. So that hasn't changed in that meaning the community involvement has not changed.
Okay. But as it stands right now, it's the action of the communities involved that will play a significant role in getting this thing over the hump. Is that correct?
That I think we have some discussions about ARPA money for instance, the Lake Massabesic thing. Can we use ARPA money for that? The department has a request in the gopher for that, as an example. We are looking at some federal funds. There's a lot of moving parts here.
Right.
So.
Okay. Thank you.
Okay, additional questions? Thank you very much, Commissioner. I'm sorry that we took so long to get you here. And we're going to be at least a 5 to 10 minute recess while we go caucus.
I signed on to the bill.
Yes,
You know, right?
Yes, yeah, just about this.
Senate committee will come out of recess. And
Motion to go into executive session.
we're still in executive session.
Oh, we are. Well,
So
thank
you're-
you,
you're-
Senator.
You're good.
I'm well
You're-
ahead of the game.
All right, I will move Senate Bill 347 ought to pass.
Come on, please, don't be a second.
Come on.
We will, we will.
All right.
Senate Bill 347.
Got it.
All right,
Senator Pearl.
I'll second it.
What was his motion?
Ought to pass.
Thank you.
This is the bill that provides the money to Laconia pending the sale. So if the sale goes through and they get their 21 million, the state is going to give them back 3 million of that for various things. So we have a motion of ought to pass. And that was made by Senator Innes, no, Senator Pearl.
I seconded it.
Senator Innocent seconded.
Multiple seconds.
It's clear in the language of the bill that nothing happens unless the money comes.
Correct.
Correct.
So
And-
Laconia understands two things.
And by the time the House gets done with this, if the sale isn't done, then they probably need to kill it. Okay?
Okay.
So, and Innes, Rosenwald, and whomever did the seconding. Is there any further discussion on that bill? All those in favor say aye.
Aye.
All those opposed say nay. The ayes have it.
I'll take it up.
And
So I moved it.
Senator Pearl is going to take it out.
One thing I'd suggest when you take it out is make crystal clear, so the legislative record is crystal clear, that the proceeds only come after the sale and out of the sale proceeds.
So you'll make sure that's in my notes.
No way.
Okay, the next bill that I have on my list is Senate Bill 454 FN.
I'll move ought to pass, and I would like to introduce an amendment that the LBA can prepare. It's a very simple amendment. And that amendment would be to make the additional $5 million transfer effective, I believe it would be FY '26 in the next budget, so that it would not have an impact in FY '25.
I will second the motion, or Senator Rosenwald actually beat me, so.
I would like to just express my concerns. An extra $5 million is great. I don't think it's gonna do a lot for housing, because what's $5 million gonna do? It's $5 million, which means we're allocating $10 million from the real estate transfer tax. We take money for Elgin, we give money to the counties, now we're giving money to the housing, another $5 million to the housing. RET is not meeting expectations.
Yeah.
So we're not bringing the kind of money in that we anticipated. And at the same time, we're reducing the number of other taxes. And if you look at the numbers clearly indicate that we have some problems on the horizon. DOT has problems, Fish and Game has problems, we're reducing tax revenue, the general fund is gonna have problems, education funding is presenting a problem. All of these problems are associated with money, money from the general fund. So I'll vote for the bill, all right, because I think it's something we kind of have to do to help people. But indeed, we ought to recognize the fact that our revenue sources are not keeping up with expectations, even though we're gonna have a surplus for the month of January. If you look at where dollars are not being produced, I think it's problematic, particularly at DOT. I think that we are gonna have to give between 30 and 50 million a year to DOT to keep them alive, based on the downfall in tax revenues from the gas tax. The problem with registrations is going down. Problems with licenses are going down. So all of these problems are confronting us, and we're
Senator.
Can I make a suggestion? And rather than passing 5 million for obligating ourselves next year, to just put it, like we have done before, put $1 in it, so if we don't have the money next year, we don't put the money in?
So my thought was not to encumber this budget any further. I think in the last budget, we put $25 million into the Affordable Housing Fund and two $5 million transfers, so a total of $35 million. I think we deposited $25 million in the budget in '23 into the Affordable Housing Fund and two $5 million transfers. I think the rationale for moving from 5 million to 10 million is not necessarily to increase the overall allocation, but to provide certainty for the fund in terms of being able to make investments. My guess is that the next budget will not see an amount over $30 million, $35 million maybe in total. So the above allocation will be a lot less than $25 million we've done in the last two budgets. I'm just speculating, but the benefit of doing that is that there is some stability to the fund. I mean, I go back to when we were funding the Affordable Housing Fund out of the capital budget, and Lou, you, I'm sure remember, was less than $1 million. And, you know, starting in 2018, when we were generating surplus, we put a lot in. That being said, housing is still probably one of the biggest problems that the state faces as a whole. The Affordable Housing Fund and InvestNH, and you know, hopefully Senator Perkins Quokka's initiative champions, helps, you know, cities and towns partner with the state, because we've, I think, done our share. But it's still one of the largest problems that we face. I think the testimony was something like we're 20,000 units short over the next several years, and we've built several thousand, so the delta is still pretty big. But at any rate, I'm not disagreeing with you on, you know, DOT and the highway fund.
Hey, remember that anything that we put in here, when the committee passes House Bill 1 and 2, if those numbers deviate, then they will take precedence over anything you do today. But this gives them an idea of where we think we're going to go. Just for the record keeping, I did take the motion of ought to pass from Senator Bradley, seconded by Senator Rosenwald, and his committee amendment to change the funding to 2006 by Senator Bradley, and also seconded by Senator Rosenwald. Okay, that's how I have the thing. Is there any more discussion? Okay, seeing none on the committee amendment. All those in favor of the committee amendment, say aye. Aye. All those opposed? The ayes have it. Now the bill as amended. Let's see. 7-0. Okay, the bill as amended. Any further discussion? Seeing none, all those in favor say aye. 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 All those opposed say nay. And the ayes have it, 7-0. And who would like to take that out?
No, take it out.
Okay.
Your
Senator
bill.
Ennis.
I know.
You're taking
Take
out
that out.
Okay.
Okay. The next bill I've got on my list is Senate Bill 493. And I will move interim study on Senate Bill 493. Seconded by Senator Pearl.
So I like this bill, but, you know, I understand the budget situation and potential situation, and I think interim study positions us to bring it back next year in the budget. So while I'd rather have it now, I get it.
Further discussion?
There is a loan program that's in place now.
I understand.
Okay, so there is the ability for a municipality in a significant disaster to go and get a no interest loan, just to go to the governor. I think that has been exercised a few times. When we had the crisis over in the western part of the state, they did go and do that, and it proved to be a successful program. Now, all of that depends upon what's left, funds not otherwise allocated. So there's a vehicle right now to do this that's in place. And I think
That's kind of where we got to, and that's why we were suggesting the interim study in case there was anything that we.
Well, again, as long as there's an avenue that people can go to, I think interim study is fine. Because there's the ability to ask for the money, all right? Doesn't mean you're gonna get it. And there's also, in the case of a disaster, FEMA. So the governor has the ability to ask for national disaster funds from the federal government. Climate change has produced a whole different situation for the state of New Hampshire. These incidences are going to be more frequent and are going to be more problematic as we move forward. It's not only New Hampshire, but it's for the rest of the country. I think what we're going to be facing on the coast, the Hampton situation, is going to be really very expensive and I think very problematic as we move forward. Anyway, just thoughts.
Yeah, FEMA funds take a long time in many cases, and that's sort of rationale to this, is to get a jump start, but I understand. So
Senator Rosenwald.
We'll look at it.
Thank you. I like this bill too, and I'm just wondering why we have to dispose of it now, rather
Again,
than waiting until we have more revenue information.
Right now, with the emergency disaster relief, it is my opinion and others that right now it's a pay after the situation so that we come up with the money. Trying to defer money now, midway through this process, halfway through the budget cycle, isn't the right thing to do. So that's why I made the motion to interim study it. Right or wrong,
I'll vote for it because the prime sponsor is okay with it, but I don't.
Did you ask him how his arm was?
Well, I can see that it's hanging off.
I need shoulder surgery.
Basically, his pitching career is over. But I will vote for that motion because he's okay with it, but I just.
I gotta be realistic, and that's it. I'd much rather have it, but.
It's the only reason I'm on committee is to twist arms.
Well, with all these
That's why I'm sitting over.
I think we're getting a little out of hand here.
Yeah.
So, watch this. Well, let's come back. Let's come back. All right. Is there any further discussion? Seeing none. All those in favor of interim study say aye. Aye. All those opposed with interim study say nay. The ayes have it. And since I made the motion, I will take it out. Okay. The next bill on your list that you've got in front of you is not one we're going to do today. 494, and if we look all the way back up, the second bill from the top, 348, we think that we're going to be able to provide some relief through the fiscal committee next month. And should that happen, then these two bills will come off a hold and probably be ITL'd because of that. So just a placekeeper for you so that you know. Next bill that's on the list is Senate Bill 97. First, we'll take a second on the ought to pass. So we have a second on ought to pass by Senator Bertzel. So we've got Pearl, and Birdsell ought to pass. And now you're offering amendments. Okay.
Who was Richard Wesson? Record keeping?
Yes. On the,
Thank you, Mr. Chair. This amendment simply moves, if you remember on the floor, we had a rather avid discussion about this bill. This simply removed the issue of, that was of concern, and it basically makes it so that the manufacturers who do animal testing, which by the way, there are zero in the state, will annually report and make it available electronically. Originally, we were putting that burden on the Office of Professional Licensure. We didn't have a method to do that, so this just makes it electronically available.
any further discussion?
I'd move on to pass with the amendment.
Well, we've already got that, but we'll let you vote here in just a second.
Okay, great.
Seeing no further discussion on the amendment 0132S, all those in favor of the amendment say aye. Aye. All those opposed to the amendment say nay. The ayes have it. And now we'll do ought to pass as amended. Is there any further discussion?
Move on to pass as amended.
Okay, we've already got that too, but that's okay. All those in favor say aye. Aye. All those opposed say nay. And Senator Pearl is going to take that up. We started with the motion, got the ought to pass, and then move the amendment and stuff, so. We kind of slid it by you real quick there, Senator. 217 is the next one I have on my list.
I will move ought to pass, and I would like to offer.
All right, so first of all, we're going to take the ought to pass by Bradley, seconded by Pearl. And Senator Bradley, you have a further.
Yes, so the appropriation in Senate Bill 217 is for $1 million. I would offer the amendment that we move that to $1. The rationale for that is.
I will second that.
Thank you. The rationale for that is, I think there is a legitimate issue here in terms of teacher retention. However, our budget situation being what it is, I think it's much better for the proponents of it and the Department of Education and whomever to come in next year's budget and propose a funding mechanism that's part of the budget process.
Senator Rosenbaum.
We also should amend the effective date because it, based on the interim study bill, Section 2 is effective July 1st of last year. So we should make it July 1st, 2024.
Since there's only $1 in it, can I suggest 60 days after passage? That way, no matter when the governor signs it, we'll be good.
Okay. I mean, as long as it's not a date that's gone by.
Got the interest on that dollar.
Can I ask a question though?
Absolutely.
If we take $1 million out and it goes over to the House and revenues look decent and they put money back, would we be willing to consider funding now rather than $1?
Certainly, by the time that the House gets done with it, we may know more about the settlement costs for the Youth Development Center. We may know more about what's going to happen with education funding, and we will have several more months of revenue that we could certainly consider it because it would come back because of the change and either be adopted or go to a committee conference. Normal stuff.
I think we've had ample evidence in a number of bills about the shortage of teachers. Particularly, I mean, when we heard today that if you teach in Concord, you get $84,000, and if you teach in Ware, you get $53,000, that's a fairly large variance. And Ware is a rural community, which at one time built a prison to be the high school. I don't know if any of you remember that, when they did a concrete block building as the new high school. Subsequently, they have built a school that's on the road now. I just don't think we can keep doing these kinds of things. We need teachers. We need teachers. The instructive in the rural area, I went to a rural area to teach when I got out of college. I went to Kennett High School in Conway, New Hampshire. I went for a starting salary of $4,000. $4,000. Now, in those days, I was able to rent an apartment for $55 a month behind a shoe store. All right? So I was livable at the time. But if we keep kicking this one down the road, we're never going to get any teachers. And speaking of teachers, I read the article in the paper about the charter school in Exeter that's going belly up and is now being looked at because of theft, fraud, blah, blah, and so forth and so on. There were teachers there, and so that's another situation next. But I don't think we can keep doing this. I just don't think we can keep doing it. We should find the money. Now, this is money that could come out of the education trust. All right? First of all, there is no education trust. It's all general fund money. It's all general fund money. And what we've done, because of the way we put general fund money in, we're always going to have more money than we need because of the fact that they have an endless supply of money based on the business taxes and the money that's produced by the other entities, the lottery, et cetera. So I don't know how we can keep doing this. I mean, I don't have any kids in school. I have grandchildren in school. They're in a very good school. They're in Portsmouth, a very good school. They get a very good education. They're able to do, my grandson is going to Morocco on a French trip. 16 years old, he's going to Morocco because he's taking a language. Many of the schools don't even offer languages anymore. Never mind taking these trips. All right, so I'm a strong believer in education, but I think we've got to do more to help them out. We just got to do more. So for that reason, I won't support anything but ought to pass.
Understand. Further discussion? Senator Burton.
I agree with you that we need the teachers, but everybody keeps bringing up the fact that Ware is getting 54,000, someplace else, Concord or whatever, is paying 83. That's individual school boards' decision-making process. That has nothing to do, I mean, regardless of how many teachers we have, if you go to school in Ware, if they don't increase the contract,
sure,
then they're still going to get 54,000.
Oh, no question, you're absolutely right. But it's perceived value. What's the value of education? In Ware, they don't value it. I mean, you can't build a building that looks like a prison and say, I'm going to send my kids to that high school. You can't do that.
Okay.
But if you look at what they've done in Bow and what they've done in Bedford, those are mausoleums. I mean, they're first-class institutions, and I agree totally. I mean, it is what it is. Just like sending a kid to Pinkerton. What's the tuition at Pinkerton? You know, about 30 grand. And they keep getting people because they value education.
Okay, the motion in front of us right now is the committee amendment. Oh, Senator Bradley.
So I think in this discussion, you're forgetting that we appropriated an additional $169 million for education funding last year. I think that in and of itself is a reason that we should start the fund, appropriate $1, and then have the discussion just as we had about increasing education funding and changing the formula next year in the budget.
Okay. Did you have anything
No,
to add?
I just think that, sure, I believe what you're saying, Jim, but indeed, the fact of the matter is you let the year go by when they're gonna be working to get people, to hire people for September start, they're gonna need them. They're gonna need teachers, and they can't find them. So, I mean, I don't disagree with anything that you're saying. I just think it's an imperative that it is what it is. And kids aren't, you know, for these reasons, kids aren't going into education. They're not choosing education anymore because they're looking at some of the salaries that are offered.
And because we could go on and on talking about education funding, let's get back to the bill. And that the motion in front of us is to change the amount to $1 and change the effective date to 60 days. If someone wants to make an amendment after we take action on this, that is certainly appropriate. Any further discussion on the amendment? Seeing none, all those in favor of the amendment say aye. Aye. All those opposed say nay.
No.
Okay, and that's 5-2. Is there any further discussion or amendment? Okay, the bill ought to pass as amended. And further discussion on that? Seeing none, all those in favor say aye. Aye. All those opposed say nay.
No.
And so that's 6 to 1. And anybody want to take that one out? Senator Bledsoe. The next one on my list is Senate Bill 345, relative to state park fees.
Second.
Have a motion and a second to interim study.
I'm looking for it.
I didn't hear what you said.
I'm looking for the bill.
State park fees for state residents. Yeah.
Mr. Chair, may I speak to this?
Just a second. Interim study, Senator Pearl, and then Senator Innes was the second. Okay.
Thank
Yes,
you.
Senator.
The reason I'm moving interim study is while we voted for this in energy, natural resources as a policy decision, I think the policy decision is sound. We're not really sure of the financial impact at this point in time, and where the state park system is self-funded, we want to make sure that we're not harming any of their abilities to do the maintenance they do on our wonderful park system. So I think it's an idea that has some merit and deserves a look at. I'm just not sure that the financial information we need to make that decision completely, the policy is here right now, so that's why I moved interim study.
Yes, Senator, further discussion?
Just have you visited some of the state parks? You know, when I was on the council, we used to talk about Pisgah. You know, the Pisgah Park over by Keene. You tell there's nothing there. Go to Bear Brook. Go to Pawtuckaway. We used to take our kids there, you know, for swimming. They're a mess. Nothing has been done. Go to that farmhouse that the Cultural Resources owns over in Portsmouth on the way from the park. It's a mess. There's got to be some way to make these things better. You know, I went to war with the famous Neil Kirk over the parking fees at Hampton, and where that money could be spent, you know, to improve the parks, et cetera. I lost that battle once, but I won it another time. If we don't do something to make these places more attractive for both our people and our visitors, where are we going?
May I respond?
All right.
Well, the bill, Senator, would have potentially provided less funding, and that's why I'm putting it to interim study.
Well,
Would have cut the fees.
It would have cut the
well, it would
state.
have been 50%. Okay.
That's why, because I don't disagree with you in the sense that we need to make sure we're maintaining our parks. That's why I'm saying, while I agree with the policy, we don't understand the full financial impact.
Okay.
And I don't want to provide any less money to our state park system.
And to add to that, several of the parks that you talked about, Senator, there is no fee, I believe, in some of those parks. So that wouldn't enter into it or not, but in some of the larger ones where they're camping and other things, it could mean a significant decrease or in the revenue or a significant increase in the rate that out-of-staters would pay. So, and maybe.
Yeah. Only 21 out of the 93 state parks, there's a fee. And only 12 of these parks generate enough money to support the entire park system.
Further discussion. Senator Rosenwald.
Thank you. I think we should just be really watchful over this stuff, because over the last year or two, the fees at Cannon Mountain for skiing were jacked up quite a bit, particularly on seniors. And the camping fees were just raised a lot too. And a lot of that goes through the fiscal committee, so there are only 10 people watching it. But I just think we should watch carefully to make sure that all of our state parks stay affordable for the people of New Hampshire and visitors, but I'm more concerned with our own residents.
Yeah.
Thanks.
Well, I agree. Remember, 71 of the parks charge nothing. That's pretty affordable, right? Nothing, pretty affordable. So we got 12 that try to generate enough money to support the entire park system. That's pretty crazy. And the parking fees at Hampton Beach will probably be less now because of the floods. There won't be any place to park.
Okay, further discussion. Seeing none, all those in favor of interim study, say aye.
Aye. Aye.
All those opposed, say nay.
No.
And that's 6 to 1. And who would like to take this one out? Okay, Senator Rosenwald. Okay. Also on the list here, I've got 369.
Move out to pass.
Okay.
I'll second.
We got there. Oh, that's a good one.
I may speak to the motion.
You like that one, Senator?
That's a lovely, lovely.
All right, good.
The Office of Licensing has become so large, it's an individual state in and of itself. There are more lawyers there than there are at the Attorney General's office. And they keep hiring more, and they keep hiring more.
Yeah.
Wow. It's wonderful that they're gonna give notice. I'm happy about that.
Mr. Chair, if I may speak to my motion?
Yes, you may.
Thank you. So if you remember, this bill is the replacement bill that we've been pushing through and trying to work on a fast track to open up the transparency of OPLC as far as it relates to meeting minutes and the materials that are provided. And this was the bill that I worked when we vetoed the bill from last season. This is the replacement bill that I worked on with the language and with the governor's office that I have assurance they will support when we put it on his desk. So we're trying to get this moved through so it can go over to the House, and I've spoken with the Speaker as well. Once it's there, they'll work to get it through committee as quickly as possible and make sure that our process of government through the boards of the OPLC are open and transparent as possible.
I think you.
So OTP was by Senator Pearl, seconded by Senator Ennis. Senator Rosenwald, you had a question.
I have a question for Senator Pearl. Since this is really about posting meeting notices, I'm just wondering why would they need another attorney?
The review process to redact information that isn't public, because some of these meetings have public and non-public sessions, and they want to make sure that while they're moving it through in a quick manner, they're not releasing any sensitive information.
Well, I guess I'd follow it up with the question. I remember when we had the joint boards, Representative Pearl. Remember when we had the joint boards?
The one, I'm sorry?
The joint boards.
Oh, joint boards, yes.
Okay, and the joint boards was handled by one person. And the joint boards moved along quite nicely. Then we had the consolidation of the boards, and we moved them over to what was the old Philbrook Center, paid about $3 million to refurbish it. And then a year later, we kicked them all out because we had to refurbish it again. And we did that because we made transitional housing. And now we have the joint boards over here. At the same time, the joint boards have grown exponentially. I don't know how many lawyers they have, but we're adding another one. And I don't know how many people they have. But I know what the rent was at one time, and I have an idea of what the rent is now. And they're a self-funding agency. And it used to be the rollover went to the general fund. Now they keep a little bit of, I think, don't they keep 5 million of the rollover to stay with the entity, and the rest goes to the
I think it is
government?
5 million.
I think it's 5 million. I would hope you would put me to the joint boards before I die. Would you do that? Just send me over there. I'll be a laborer grade
So
25.
noted, Senator, we'll
You could put a bill
put
in
that in
next
the
year.
permanent
and we'll
record.
work on it.
Put that in the permanent record.
Okay, further discussion? Seeing none, all those in favor of ought to pass, say aye. Aye. All those opposed, say nay. The ayes have it, 7-0. And Senator Pearl will take it.
Be a busy beaver.
Okay, that's what's on my list. Is there any other bill that anyone wants to bring up, discuss, make a motion on?
Let's print this as well.
Oh, do we have an amendment coming to that water bill?
Yes.
Okay.
Who writes it? That's the question right now.
No, I'm not asking that question.
It's in process.
Okay. Okay, thanks.
And from my point, I would hope that it talks more to regional water district instead of a particular town. All right, anything else anybody wants to talk about?
Move out of exec.
We have a motion to come out of executive session, seconded by Senator Pearl. All those in favor say aye. Aye. All those opposed say nay. The ayes have it. Our business today being complete, we are adjourned.